more than just business news, we're news for business people.
Good morning, I'm Alex Matthew and you're watching DayBreak on Bloomberg Quint Live. Let's look at the headlines. Asian markets open little changed as volumes remain low in the last week of the year. Crude oil prices breached the $60 per barrel mark for the first time since 2015 after an oil pipeline explodes in Libya. GST monthly revenue falls to its lowest in November. The government collects just under 81,000 crore rupees. Demand for bigger and better TVs is helping electronics retailers offset the slowdown induced by demonetization and GST. That's a special report. On to international markets now, and volumes are understandably low in the last week of the year. US stocks closed lower, with the highlight being a fall in technology shares. Apple caused the tumble after analysts cut the iPhone X shipment projections for the first quarter of 2018, citing signs of lackluster demand at the end of the holiday shopping season. This offset gains in energy stocks after oil prices hit their highest level that we told you in more than 2 years. At close, the Dow Jones Industrial Average was flat. The broader S&P 500 lost 0.1%, and the tech-heavy Nasdaq Composite Index shed 0.3%. Let's take a look at the Asian markets now, and they've opened mixed. Here too, volumes are expected to be thin. Let's look at the Nikkei and see where it's at. It's more or less flat, up about 0.06%. Last I checked, the Kospi was the only one out of the three early risers to be lower. It was down about 0.5%. But let's turn to the Indian market now. And Jayesh Khilani and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Morning, Jayesh. First to you. What's it looking like today?
Morning, Alex. Well, it's looking like a muted to positive start for the Indian market. Have a look at the SGX and what it's suggesting, just about 5 points in the green. But mind you that this has come off the day's high point about 15-20 minutes back. This was about 20 points higher and it has cooled off from that point onwards. Now, as you were mentioning, all the Asian markets are now back after the Christmas holiday. The commodity space was the one which was buzzing overnight. So oil prices, WTI spiked about 2.5%, and WTI touched the $60 per barrel mark for the first time since 2015. Now, this was on the back of a pipeline blast that happened in one of the refineries in Libya. Moving on to gold, COMEX gold has seen about gains for 4 consecutive sessions and just shy of the 1290 mark now. As far as metals are concerned, no overnight queues coming in from the London Metal Exchange on account of holiday. But if you have a look at the Shanghai Futures Exchange, most of these base metals are trading with a positive bias. So zinc, copper, aluminium and steel have gained about 0.5% each. As far as the currency space is concerned, we got cues from the euro, which actually is, it was largely flat, about 1.18 for the euro, and for the pound it actually declined. This was also largely flat, 1.33. As far as the Japanese currency is concerned, currently trading at about unchanged for the Japanese yen as well. Now, the flows, looking at the rupee, it actually, it was up about 0.03% and closed at about 64.07. As far as the flows are concerned, once again, this is reflective of the December factor. We saw net sell number by the FIIs in cash market to the tune of only 44 crores. While the DIs, on the other hand, bought a whopping 544 crores in the cash market. Right now, the FIIs for the month have sold about 8,000 odd crores, and the DIs have pumped in more than 8,500 crores for the entire month, that is. Now, let's have a look at how the market closed actually yesterday. Remember that it was a late 1 hour surge that we saw for the Indian market and managed to close above the 10,500 mark for the first time for the Nifty. So we had a 0.4% gain coming in. However, the banks did not do really well. We saw only 0.1% for the entire Nifty bank space itself. Mind you, PSU banking index was the biggest laggard over there, and the Sensex gained about 0.2%. Moving on we saw that volatility came back into the market. The India VIX actually surged 4%. And, as far as sectors are concerned, Nifty Realty and Nifty Pharma, that was, where the gains were coming. So 1% each for both of them. Nifty PSU Bank, like I was telling you, that was the big laggard, declined about 0.7%. As far as the individual contribution is concerned, Reliance and Bharti Airtel led the way with 12 points of contribution from both of those, and Sun Pharma Vedanta contributed about 5 odd points. As far as losers are concerned, banking names, no surprises over there. HDFC Bank and SBI led the fall, while Infosys, HUL and others also contributed. But coming back to the volatility space, Agam, the India VIX actually surged 4 odd %. What is the future and options looking like?
Sure. So we did see the Nifty move up around 38 points, and despite that, we still saw an increase in VIX. Well, this means that we are looking at more and more traction in options. Moving in with respect to what's happening in the futures spaces, you can see we're looking at just about 2% added in the December futures. Despite the fact that it is expiry, we'll be watching out for that cue. Moving on in terms of the Nifty Bank as well, we're looking at unwinding around 3%. But as Jayesh was just mentioning, the VIX has moved up by around 4%, around the mark of 12. 12.5 is what a lot of those traders are watching out for in terms of anticipated volatility as we move into trade over the next few sessions. But that said, with respect to rollovers, well, they picked up. Currently standing at 35% with 2 more sessions to go. We'll have to wait and watch how this number pans out eventually at the end of Thursday. But that said, the put call ratio remains unchanged at 1.59, and what we've really seen is activity in only one option mostly. That's the 10,500 put. More writing coming along given the fact that the Nifty moved above that mark. In terms of stocks which have moved into the band, we have HDI and Jet Airways, a lot of changes coming in there, and Gen Irrigation, Reliance Capital, among other counters which have also moved into the band. But those moving out of the band, do remember it's expiry week, so we will have a lot of those changes. So we have Fortis Healthcare and Reliance Communications. Reliance Communications is one counter we will watch out for, considering the surge we saw towards the end of the session yesterday. Moving in, some other stocks that we're watching, Cummins India, looking at fresh longs. Similarly, plenty of other counters also looking at lot of longs building in, considering the Nifty is now firmly above the mark of 10,500. So a lot of stocks to watch out for, and also perhaps whether or not Nifty can hold on to 10,500 as we move into today's year of trade.
Right, Agam, thanks so much for that. But let's move on to the other two markets that we're talking about, the rupee and the bond market, of course. And Saloni Dhanuka is here to tell you all about what's happening. Saloni, the rupee snaps a 2-day rise, but the fall was marginal from what I saw.
Absolutely, Alex. So the rupee snapped its 2-day winning streak yesterday, and it ended marginally lower at 64.08 levels against the dollar. Now, in the absence of any fresh trigger in the currencies market. Now, rupee majorly hovered in a narrow range of 9 paise throughout the day before slipping 4 paise to 64.08 levels per dollar. On the global front, most Asian currencies ended mixed in thin holiday trade, with Chinese yuan rallying to 3.5-month high before retreating 0.2%, while on the flip side, South Korean won gained the most, that is 0.3% throughout the day yesterday. Now, the dollar traded in a tight range against major currencies, hovering around the unchanged mark, while trading volumes remained low due to Christmas holidays, with European markets remaining shut yesterday. Coming back home, dollar rupee is trading marginally higher at 64.04 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for the Indian rupee. Moving on to bond market, sovereign bonds erased losses to end little changed after a report said that recapitalization of bonds that are to be issued by the government will not be sold in the open market, and consequently we have seen that the yields ended steady at 7.27% yesterday, while global funds increased their rupee debt holdings for the second consecutive session. They infused close to 840 crores according to NSDL data, Alex.
Thanks for that, Saloni. Let's shift focus now to commodities, and Jayesh is back to tell you all about the updates there. But Jayesh, oil is clearly the focus. It surged to the highest price since mid-2015 after the pipeline blast in Libya.
That's right, Alex. So we saw a 2.5% jump for oil prices overnight. on account of the pipeline blast in Libya. Now, what this has done is that WTI has touched an intraday high of 60.01, which is the highest level that we saw since mid-2015. And Brent also has touched an intraday high of about 67.1 for the barrel. Now, what this will do essentially is that analysts are expecting Libya's production to decline as much as 70,000 barrels per day on account of the blast. On the other hand, the positive that we got for oil markets is that Saudi Arabia is now seeing that oil revenues could jump as much as 80% going into 2023. So overall, looking extremely positive for the oil markets. Looking positive for the precious metal space as well, as gold has actually posted a high of about 1 month. And COMEX gold actually touched 1,289 for an ounce. Now, gold prices have also closed above the 200-day moving average for the second straight day running. So, important technical resistance being crossed over there as well. As far as other precious metals are concerned, silver, platinum, and palladium also healthy gains for themselves. We didn't have many queues coming in from the London Metal Exchange on account of the holiday. But if you have a look at the Shanghai Futures Exchange, most of the base metals are trading with a positive bias. So copper, zinc, aluminium, and steel have all gained in the range of about 0.5% each.
Thanks for that, Jayesh. Now, clearly, energy stocks are going to be watched in today's session, so do watch out for those big names there. But let's move on. GST collections for the month of November dropped to their lowest level since the tax was rolled out. The low collection figures come after the government cut tax on more than 200 items. Nikunj Hori has this report.
The government has collected about 80,808 crore rupees as goods and services tax for the month of November, collected as on December 25th. Now, this has been the lowest GST collection since GST was implemented, after a dip to about 83,000 crore in the month of November. Now, this is the lowest collection so far, and the primary reason for this shortfall in revenue is a massive rate cut announced by the GST Council in its meeting held in Guwahati. So this rate reduction came into effect from November 15, 2017. So this rate reduction does not have a direct, it has a total impact on the collections, considering only the rate reduction came into effect halfway of the month. Now, if we were to analyze the GST collections, the CGST collections are about 13,000 crore as compared to about 18,000 crore collected as SGST revenue. Now, the reason for this is the IGST that was primarily initially paid by companies to transfer their own goods from one place to another, is, along with transitional credits, is being utilized to pay CGST liability of these taxpayers, and that is the reason why CGST collections are still lower as compared to SGST collections. However, there's a good news for the government. The total returns filed as on December 25th are about 53 lakh as compared to about 51 lakh filed in November. And the number of composition dealers, number of taxpayers who availed the composition scheme has increased to about 16.6 lakh from 15 lakh a month ago.
Shares of Reliance Communications jumped 32% in yesterday's session after the telecom operator said it is exiting strategic debt restructuring with a zero write-off to lenders. How? It will lower debt by selling its wireless business and monetizing land holdings. Chairman Anil Ambani said Arcom will reduce its total debt to 6,000 crore rupees from 45,000 crore. Here's more from Anil Ambani on the rationale behind the new debt recast plan.
We expect a full and financial closure of all the transactions for all the modules that we are running to be completed between January and March 2018, which is the next 3 months. The overall debt for Reliance Communication will be below 6,000 crores, which is a huge reduction. I think the driving force for the banks was A, no write-off, 2, substantial amount of prepayment, 3, practically reducing their exposure in the telecom business to near zero, the wireless business to absolutely zero. So that was the comforting factor, and we aligned all the lenders together to get it done. In the packages that we've got for the wireless business in terms of the monetization, there are a large number of bidders.
So that's the perspective coming in from Anil Ambani there. But what does the debt reduction plan mean for banks? Ira Dugal sums it up in this report.
The new debt reduction plan announced by Reliance Communication on Tuesday certainly seems to bring immediate relief to banks, although it still remains unclear whether they're just kicking the can down the road or whether this plan will mean actual resolution. Let's start with the near term. In the immediate term, what this plan does is prevent banks from having to convert debt into equity. Remember, in June, they had agreed to strategic debt restructuring in RCOM, which meant that they had to convert 7,100 crore in debt into equity, and they would have held 51% stake in Reliance Communications post that conversion. Now, there were two complications with that plan. One, the conversion price agreed upon was 24 rupees 71 paise, and the stock was trading well below that. So if they had converted at that price, banks would have been sitting on a fairly significant mark-to-market losses. Also, once they had converted, banks would have been responsible for either selling off individual assets or drawing in strategic investors into Reliance Communication. As part of this plan, Anil Ambani said that there will be no debt to equity conversion, so banks are perhaps off the hook immediately. But the second question is, does this prevent Reliance Communication from going into insolvency? Remember, among the insolvency petitions that are pending against Reliance Communication, the most significant one is the one from China Development Bank, which is a large Chinese creditor to Reliance Communication. One person familiar with today's plan told us that as part of this debt reduction plan, the Dhirubhai Ambani Knowledge City special purpose vehicle, which will be set up, a large chunk of that will go to the Chinese lenders. Perhaps then the agreement is that the Chinese lenders will withdraw their insolvency petition. Anil Ambani, when asked the question as to whether this will stave off insolvency pleas, said that it is understood, or it is perhaps expected that insolvency petitions would be at bay because of this plan, because otherwise, he said, you may as well have gone through the resolution process under the aegis of the NCLT. But until you see China Development Bank actually withdraw the insolvency petition, you can't say that with any clear certainty. The final question, and the most important question perhaps to ask, is why you should believe this resolution plan over the previous resolution plans. Remember, they had a plan to merge with Aircel. They had a plan to sell tower assets to Brookfield. They had a plan also to bring in 33,000 crore through asset monetization. None of those worked out. So will this work out? Well, the only thing we can say is that Anil Ambani did say that he has binding bids on the table for a large number of the assets, and the one person that we spoke to who is familiar with the plan said that Reliance Jio is one of the parties which has submitted binding bids for at least the spectrum and the tower assets. So perhaps this time around they will actually be able to monetize some of those assets, but until March, until you actually see the money come in, you can't say that with any certainty.
Well, that's the word on Reliance Communications. How much more fuel does that stock have today? Well, you just have to wait and see. But on to the stock of the day. GSPL has successfully completed basic oxygen furnace in Odisha, in its Odisha plant. Nikki Mirchandani, who tracks the counter closely, joins us with the details of that development. Nikki, morning.
Morning, Alex. The company has successfully completed a 250-ton basic oxygen furnace plant at its Odisha steel unit. Now, this marks the completion of all the facilities of 6 MTPA steel integrated plant that we have at Odisha, and with this, GSPL will be able to completely utilize its 4 MTPA blast furnace capacity, and it has partnered with SMS Group for engineering and supply of the key equipment which goes behind the making of this furnace. Just to give you a little details of what this plant will do, it will produce up to 3 million ton of high-grade steel per annum, and this is expected to lead to a lot of cost efficiencies for the company, and is also expected to lower the energy cost for the company. Now, GSPL has commissioned 4 MTPA blast furnace back in August 2017, and it has now with this, the BOF is the last major installation of the complete plant. The plant has been set up overall with an investment of around 33,000 odd crore, and has been so far the most largest integrated plant in Odisha, according to the press release of the company.
Thanks, Nikki, for that. Now, clearly one stock there that you have to watch out for, but what are the other stocks? Shraddha Babla has an entire list to tell you about. Shraddha, morning. What are the stocks on your list today?
Morning, Alex. To start off with Prestige Estates, now where they've said that they are going to acquire 66.6% stake in its group company Prestige Projects Private Limited. Now they currently hold 33.34% in its associate company, and they will buy out the remaining 66.6% from the landowners and investors who hold that stake. Now Prestige Projects Private Limited owns a land parcel in Bangalore, which the company now proposes to develop an affordable and mid-income housing project on, and hence that acquisition. They've said that they'll complete the acquisition before 31st of January. On the back of real estate, you also have DLF, which has just informed exchanges that the promoters have concluded the sale of 33.3% stake in the rental arm to GIC. So the deal has been concluded. On the back of fundraising, you have Canara Bank, which has approved raising equity capital of up to 3,500 crores via QIP. You also had Punjab and Sindh Bank's board meeting yesterday, where they approved raising funds via share issue. They haven't spoken about the amount that they intend to raise. And lastly, on the back of bulk deals, we're tracking Lokesh Machines, where Sushmita Kacholia, who's the wife of known investor Ashish Kacholia, sold 0.8% stake in the company yesterday. Remember, on Friday also they had sold about 0.7% stake. So that stock is probably likely to be in focus.
Thanks, Shraddha, for that. And Nikki Mirchandani is back with the big brokerage calls of the day. Nikki, what do you have for us?
Sure, the other one that I'm picking up is Motilal Oswal initiating a coverage on Sanghi Industries with a buy rating and the target price of 157, which indicates a potential upside of nearly 23%. Now, the company is a low-cost producer, and it's on the back of the quality limestone, locational advantage and strong integration. Its strength really lies in the quality of the limestone reserve that it has. The margins are expected to expand going forward in the next 3 years. Now, diversification into the new market also seems to be a positive for the company, which appears to be a strong re-rating candidate on the back of increased capacity, anticipated scale benefits. Looking at the EBITDA per PAT CAGR, the brokerage expects a growth of 33 to 61% over FI in the span of next 3 years on improved pricing as well as the operating leverage. The brokerage expects the return on equity for this company to increase by 11 basis points to 16.8% in FY20, led by a sharp uptick in its profitability. The second one that we have is Edelweiss and Kotak Mahindra Bank. That counter has been upgraded to buy from neutral, and the target price has been revised to 1,205 per share. The upgrade follows the recent management interaction that the brokerage had. The confidence is stemming in from culmination of integration banks, and the merger of ING Vesa Bank is lower than estimated. In terms of the risk of operational as well as asset quality fronts. Also, the improved visibility going forward from this merger seems to be a positive for this company, and the liability franchise continues to strengthen according to the brokerage for this company. However, in terms of risk factors, continuous stress in terms of the economy, and hence its CVCE portfolio model, which is expected to moderate bank growth, could potentially be one of the risks for this counter, according to the brokerage.
Thanks for that, Nikki. Now, let's move on to a special report of Bloomberg Quint. Hit by the twin shocks of demonetization and GST, the consumer durable segment struggled for growth in 2017. But some sub-segments have proved to be more durable than expected. Buyers have spent big on large TVs and the latest smartphones. But was that enough to turn the tide? Charlene D'Souza finds out in this report.
2017 has been a dismal year for the consumer durable sector, thanks largely to the twin blows of demonetization and GST. However, there is a silver lining amidst all the gloom. Televisions, especially the big and bright ones, seem to have got the Indian consumer hooked. Strong sales of 4K and OLED flat panel TVs have helped retailers make up for lost demand, with Samsung and LG being the big winners.
What worked for us, the larger TVs coming in, OLEDs, 4Ks. So we saw huge value growth, but the volumes were really lower than last. My value growth is 15%, my volume growth is around 6%. Okay, so 6% more tickets, but 15% higher value.
And TVs aren't alone. India's fascination with smartphones too has helped cover some of the slowdown blues. Electronics chain Chroma saw its volumes grow by 6%, largely due to new launches from OnePlus, Samsung, Xiaomi and Vivo. But even with the boost from TVs and smartphones, the segment as a whole lagged behind. Retailers and electronics makers hoped for the market to recover during the festive season and lured buyers with easy finance schemes. Yet, despite all their efforts, the sector only managed to clock a single-digit growth this year.
The appliance business was affected somewhat last year because of demonetization and this year also because of GST. But I think that the growth rates have come down slightly. Appliance industry has been growing around 15% over the last, say, 5 years. So we think around maybe something 11-12% this year.
Demonetization and GST certainly played spoilsport for the consumer durable sector this year. However, televisions and smartphones saved the day. With the new year fast approaching, consumer durable retailers are hopeful that the new year will bring in new fortunes for the home appliances segment. This is Charlene D'Souza for Bloomberg Quint.
Well, you'll find that and a lot more live market action right here on Bloomberg Quint Live. But there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. SEBI penalized 63 Moons Technologies, that was formerly known as Financial Technologies, as it failed to seek prior approval for the name change from stock exchanges. The change in name was effected last year after Financial Technologies came under the scanner for the NSEL scam. State-run Indian Renewable Energy Development Agency has filed its draft prospectus with market regulator SEBI to float an initial public offering. The proposed share sale comes at a time when the government is working on ramping up renewable energy generation capacity as part of larger efforts to increase clean energy portfolios. That's all we have for you on this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.